Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Over the 5 consecutive days, the Australian dollar has remained in somewhat a negative sentiment. It all began last week after the RBA Governor Lowe said that there was a possible chance of, or hinted that there was a possible chance of a November rate cut. Also, there is views that the statement that was released earlier this month, that from the RBA, that the market views that the statement was somewhat changed from a measured bias to an easing. Still, the market is still somewhat assessing where the next move is going to be from today's opening. Although I am calling down towards 70 cents, which isn't too far away after posting a low today of 75, there's still a little bit more room in terms of the MACD. To be on your guard to a slight potential squeeze maybe to the start of this week, but resistance seen around 71.25 to 35. But nevertheless, from the last recent price action that is, we can see that the market is still holding to a potential downside move, and let's see and reassess from 70 cents. Still continue to trade if you're from the short side to your risk management and adjust your stop losses and take profits accordingly to those assessments in how you're reading the market. Because no doubt, as we get closer towards the RBA's next rate decision on 3rd of November, along with that, we've got the US election. The market will be very whipsawed. No doubt it will be running on more factors of what's printed in the press. So we could see a bit of a movement in terms of the US dollar. Because if you look at the US dollar when it comes to the euro, the fact is it is attempting to regain further momentum as the euro still plays to a somewhat negative bias from the indicators given here from the RSI and the MACD. The immediate target is seen around 116.70. Now a break beneath there would give further to the downside risk of 116. I'm not coming out with big calls to the fact is because there's no trend. When there's no trend, there's going to be a lot of volatility and a lot of whipsaw price action. But viewing on how this market is actually trading presently, in terms of the short term, is that the RSI is married up to the MACD. So I do anticipate a move to at least 116.70. And if it does break there, we'll give another 70 point, probably stop loss and move down. Due to the fact is that the market is a little bit long from previous. I do expect to see either take profit from a short side or people bailing out of their longs. Either way, should generate enough risk to see a move down towards that 116 level. When it comes to the dollar yen, well, there's not a lot to really go on. It is attempting to at least try and stage a recovery after just closing above that trend line there. And with that hammer in place, could see a little short squeeze up to the highs of 105, but nevertheless not likely to sustain. I believe the broader picture, when we look at the weekly, is still somewhat negative, but it is attempting to recover above this trend line, so we do need to keep a watch if we are trading from the short side, as we could see a short squeeze if it does exceed over the last 4 trading days up around that 105.70. Well, there was no outcome from the 15th of October when it comes to the Brexit. Nevertheless, the market was a little bit whipsawed and still likely to be. We are holding to a somewhat negative bias, but there's still that 128.70 level, and if we do break it, then yes, there will be a little bit more risk and exposure to the downside anywhere as far as 125.50. It's very hard to pinpoint where the market will find support or where the balls are inside this range. Nevertheless, whipsaw price action is going to be, so do be aware that it might be a little bit difficult to trade due to the whippy price action. I do anticipate further weakness when it comes to the sterling yen as we look at the MACD declining, but not quite confirmed until we get the break of 135.80. We have stabbed there a few times, but not closed under there. We do need a close from a New York base to support the downside move to about 134 to about 131. Still maintaining under the level of 1,926 for gold, and still poses a little bit of risk when in terms of trading. And the fact is that we could fall back towards this region that was rejected around 1,883. It is assessed that over the last 3.5 trading days, the market is somewhat breaking down once again. So I'm not ruling out another test towards that region. I'm not calling that we will break it, but it will be challenged and see if the market does wear the support away down to 1,850. But we do need confirmation from 83 break. Looking to the top side, resistance is little until around 26 to maybe about 31. And wrapping up with oil, well, the resistance is still holding at $41.80. Until that we get that break of that 70-80 level, then we could still see a move towards the bottom side of the range, which is around $38.50, 80 area also. Well, that wraps it for today. Thank you very much for joining me. And as always, look out the intraday report. And I hope you enjoyed a great start to this new week.